Ladies and gentlemen, good day and welcome to Indian Energy Exchange Limited Q1 FY23 results conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Kishore from Axis Capital Limited. Thank you and over to you, Mr. Kishore.
Thank you, Michelle. Good afternoon, ladies and gentlemen. On behalf of Axis Capital, I'm pleased to welcome you all for the IEX Q1 FY23 earnings conference call. We have with us the management team of IEX, which is represented by Mr. S.N. Goel, Chairman and Managing Director, Mr. Vineet Harlalka, Chief Financial Officer, Mr. Rohit Bajaj, Head Business Development, and Ms. Aparna Garg, Lead Investor Relations. We will begin with the opening remarks from Mr. Goel, followed by an interactive Q&A session. Over to you, sir. Thank you.
Hello. Hello. Good afternoon, everyone, and welcome to the earnings call for Q1 FY23. Joining me today are Mr. Vineet Harlalka, our CFO and Company Secretary, Mr. Rohit Bajaj, Head of the Business Development, Mr. Amit Kumar, Head Market Operation and New Product Development, Mr. Swan Gautam, CTO, Mr. Samir Prakash, CHRO, Mr. Inanil Chatterjee, Ms. Aparna Garg, and Mr. Archit Gupta. The pace of Indian economy activity continues to remain robust. India witnessed a strong start to the year with the index of industrial production growth at 6.7% year-on-year in April 22, which further increased to 19.6% in May 22, highest since August 21. During first quarter 23, the manufacturing PMI increased to 54.7 in April 22 as compared to 54 in March 22, driven by faster expansion in both new orders and output. However, it is down to 53.9 in June 22. The services PMI increased to 57.9 in April 22 as compared to 53.6 in March 22 and further increased to 59.2 in June 22. The energy market during the quarter faced crisis globally. The heat wave in various parts of the world and Ukraine war upended the global energy markets. The increase in demand coupled with rising input costs led to high electricity prices in the market. For example, in Australia, wholesale prices rose 2.5 times in the first half of 2022. Similarly, in Nord Pool market, average wholesale prices for the first half of 2022 were 2.7 times than those in the year earlier. And in Japan, average price of electricity doubled on a year-to-year basis. And this all caused by increase in prices of imported coal by almost about 2.5 times and increase in the LNG price by more than 2 times. A similar situation prevailed in India. Electricity consumption in Q1 of FY23 increased to 401 billion units, translating into 18% year-on-year growth on account of increased industrial activity and heat wave across the country. However, there were supply-side constraints on exchange platform. Domestic coal was mainly supplied to PPA-based plants to meet demand. Availability of e-auction coal reduced, increasing e-auction price by 400%. There was a significant increase in both imported coal and gas price. As a result of this, generation from imported coal-based plants and gas-based plants also reduced. The increase in electricity consumption and skyrocketing of input costs led to an increase in the price on the exchange platform. The average day-ahead market prices increased to rupees 7.7 per unit during the quarter. As on 30th June 2022, the total installed capacity of power generation in the country stood at 404 gigawatt, out of which the renewable capacity is at 161 gigawatt, which contributes almost 40% of the installed capacity. The growing contribution of renewable energy is aligned to India's commitment of 400 gigawatts from renewable by 2030, made by our Honorable Prime Minister in COP26 summit held in November 21 at Glasgow. On the regulatory and policy front, several developments have taken place. A few highlights are: CERC has issued order on 7th of June 2022 approving the much-awaited long-duration contracts for trading up to a period of 3 months. These contracts are called term and market contracts. This will facilitate the DISCOMs to cater the demand for long duration within the short-term market and optimize their procurement cost. This will increase market share of exchanges in the overall power market. CERC issued Connectivity and General Network Access to the Interstate Transmission System Regulation 2022 on 7th of June 2022. This will streamline transmission charges being paid by the market participants and simplify obtaining transmission access for carrying out transactions. GNA will rationalize transmission charges for exchange transactions and will further promote deepening of market. Subsequently, on 11th June 2022, CERC issued draft regulations for sharing of ISTS charges and losses to ensure avoidance of duplication of transmission charges in collective exchange transactions. On 6th June 2022, Ministry of Power issued electricity rules for promoting renewable energy through green energy open access. As per the rules, consumers with contracted demand of 100 kilowatt and above is eligible for green energy open access. Certain relaxation on open access related charges also have been provided to the consumers. For green open access, there is no additional surcharge, and even the cross-subsidy surcharge has been capped to 50% for the year in which open access is granted for a period of 12 years. This move will not only incentivize the consumers to go green, but also improve participation of these consumers in the exchange market. On 3rd June 2022, MOP notified late payment surcharge and related matters rules 2022. The key highlights of these rules are: all distribution licenses to intimate their schedule for power draw on day-ahead basis from the generating companies with whom they have a PPA. And thereafter, the generating company will have the option to sell the unrequisitioned power in the power market. Same has been captured by CERC in the draft grid code also. If the DISCOMs doesn't establish payment security mechanism or continues to default for a period of 30 days from expiry of the notice, the GENCOs can sell 100% of the power to the power market. These regulations will help increase sell-side liquidity on the power exchange and will be highly useful for market development. On 9th of May 2022, CERC issued terms and conditions for trade of renewable energy certificate. This will create fungibility of RECs issued irrespective of type of renewable technology and will provide flexibility to the RE generators to sell their power in the green market or in the DAM market and take REC. These initiatives are aimed at creating an efficient power market and will lead to
The first question is from the line of Mrs. Sumit Kishore from Axis Capital Limited. Please go ahead.
So my first question is that month-to-date electricity volumes on IEX in July are down over 10% year-on-year. HPX started with TAM volumes for 6th of July, and PXIL has gained some market share compared to previous years in the first quarter of FY23. Could you please speak about the competitive landscape, the likely impact of RTM and DAM launch by HPX in coming days? That's my first question.
Yeah, SPX has started operation from 6th of July, and they have only started one segment, which is day-ahead contingency market. Day-ahead contingency market is the place where you have continuous price matching. So, in this market, volumes transacted are lower. If you see, DSC market volume is hardly about 15-16% of the total volume. So out of that 15-16%, yes, they have been able to get almost about 17% of the volume. And PXIL also, I mean, during the quarter, because there was very high price discovered on the exchange platform in the day-ahead market, and even at 12 rupees price cap, also many of the distribution companies were not able to get power because of the cap is price at 12 rupees. And to avoid that, many distribution companies started doing transactions in the TAM market so that they have assurance of getting power on weekly and daily basis, day-ahead basis. So many transactions shifted in the day-ahead market, this TAM market. And in the TAM market, as you know, that it is not a price discovery, it is a price matching. So all exchanges are at par, and maybe some of the exchanges had given some promotional scheme they had introduced. Because of that, they could get some volume. But I can tell you one thing, that in the first quarter, our market share has been almost about 85%, and in the month of July, we are maintaining a market share of almost about 89%.
Okay. Just to follow up on this point, we understand that HPX is also going to launch products equivalent to day-ahead market or real-time market in the coming days, and they count among their shareholders entities like Haryana, West Bengal, Manikaran. Does that mean that although you have the dominant market share in DAM and RTM, is it possible that competition can chip away on market share?
Let them launch these products. I think then only we can say anything, because PXIL also has both these products. They had DAM and RTM, and they also have important market players as their shareholder. So in spite of that, we have been maintaining our lead in these market segments. So I will not like to comment anything till we see their performance in these segments. But as an exchange platform, what we have to do is do something to provide value to our customers, do innovation, to add new products, provide a robust technology platform. And that is what we have been doing. I think in the last 2 years, the kind of new developments, new products, and new customer-centric activities which we have carried out, I think with all that, we should be able to retain our market share.
Fair point. My second question is, what is the pricing discipline that you are seeing by competition? We understand that PXIL has been offering incentives on the 4 paisa in term ahead market and REC. Is HPX doing the same, and if at all, is IEX planning to follow suit, or are you already providing incentives in RECs?
We have no such plan in the electricity market.
Okay. Last question. There has been a launch of the long duration contracts. Finally, So what is the initial experience and what is the expectation for the balanced fiscal in terms of adoption of LDCs? Is the financial health of DISCOMs going to be, sort of a roadblock in getting them on board for contracts where, they are in the habit of not paying up in the normal payment period? How would the working capital work out?
See, we launched this long duration contracts from 27th of June, and we are seeing a lot of interest in this market segment. We have done a couple of reverse auctions also, but only problem is today in the market, coal availability in the auction space is very, very less. Last year, I think coal auction was about 28 million ton, whereas this year it was only about 9 million ton. So that's the price in the e-auction market was 400 times. So the rate which is being quoted by the generator in this long duration contract for fast segment is pretty high, of the order of 6, 7, 8 rupees. And distribution companies are not willing to enter into a purchase agreement for 2-3 months at this high price. So because they have apprehensions maybe that the price may come down. So in the day-ahead market, yes, I mean, since that is the last opportunity for them to buy power, they buy power at this rate. But in the term-ahead market, they are not willing to get into contract at this high rate. So no transactions have materialized, but we are getting interest. And as far as payment is concerned, I don't see any issue.
Okay.
In 2008, when we started our day-ahead market, at that time also the health of the distribution companies was in fact worse than what it is today. And that time also nobody was comfortable that distribution companies would make advance payment, but they did it because they found value in the day-ahead market. They found value in the exchange transactions. So here also in the long duration contracts, if they find competitive price discovery happening, I'm sure payment will not be an issue.
Well, thank you so much for those answers. Operator, please take the next question.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and congratulations on a decent set of numbers. My first question is, does in your opinion the late payment surcharge rules to schedule distribution companies by 10 a.m. is likely to be a very, very material event in medium term for our volumes? Yeah.
Yes. I can tell you one thing, that this can be a big booster for the day-ahead market, because if you look at the power of these central generating companies, it is almost about 80,000 megawatt. And out of that, the power which is unrequisitioned, even if it is 2-3%, then also it can be almost about 20 billion units. That's a rough estimate which I made. And if that kind of power comes to the day-ahead market, I think it can provide a lot of liquidity.
Mm-hmm. Understood, sir. Secondly, on this, sir, on the ancillary market, cross bidding, capacity market, which are the things? Is there
this was the major impact on the increase in the cost in this quarter.
Okay. Sir, my last question, if you just look at your cash and cash equivalents, including the liquid investments, it's almost up 80%. It's almost about 1,250 odd crores. And that's kind of a drag on the ROEs as well. I'm pretty sure that there are some security deposits included in that. Even if you were to adjust, that's a very significant amount of your balance sheet size now. How do we plan to deploy this? I mean, are we just going to sit on cash, or is there some plan over there?
It is basically, if you look into the amount of 300 crores, these are basically the deposit amount or the float which we receive for the paying payout obligation. Because of the sudden increase in the pain because of the higher prices, so this is float we have to maintain because we have the payout obligation. So it's not a amount which we are lying with, because whatever the amount surplus we have, it is already invested. So amount which are lying there substantially are put into the FDs and other things. So we are looking and taking care of all the investments which are there. Shoulder funds around 668 crores. 668 crores.
Yeah, so we have almost about 670 crore rupees of shareholders' money, and out of that we are going to pay dividend, which will be about 90 crore rupees. So that will leave almost about 570 crore rupees with us. So that is the money for which we can look for investment options. We are working on few opportunities, new options, new diversification initiatives. So as and when that materializes, maybe we'll need some money for that. And even otherwise also, I think we need maybe 150 to 200 crore rupees for the IEX day-to-day operations also.
All right, sir. That's it from my side. Wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Nikhil Nigania from Alliance Bernstein. Please go ahead.
Hi. Hi, sir. Thanks for taking my question. My first question is regarding power supply. So as you mentioned, supply has been less than the demand in the exchange in the first quarter. And going forward, if you see most of the power plants coming up are either on the thermal side, they are either NTPC state government plants, or on the private side, they are renewable power plants, which are typically locked in PPAs. So given that, how do you see the exchange sustaining strong volume growth going forward, given the supply being locked in PPAs, future supply side?
Yeah, see, on exchange platform, there are two types of sellers. One is distribution companies themselves sell power because they have surplus on real-time basis depending on the demand and supply position. And there are cases when they have PPAs capacities far in excess of their demand. And if the exchange clearing price is reasonable, they sell power on the exchange platform. In fact, last year, the sell by distribution company was more than 50%. And then we have generating companies which sell power. So on the generation side also, we have almost about 10,000 kind of megawatt capacity which is there in the merchant route available. And earlier, even the imported coal-based power plants were also participating because imported coal prices were lower. So that is another 10,000 megawatt capacity. So capacity-wise, I don't see any challenge. Only problem is now e-auction rates have increased and imported coal prices have increased. So that is why generating companies selling power at high price and clearing prices are high, and that is why the clearing volume is also slightly lower.
Got it, sir. My second question is on the competition landscape, competitive landscape. This question came up earlier regarding transaction charges on the exchange from the competition. So on this, there was one filing by the Hindustan Power Exchange to CERC requesting for permission to give volume-linked discounts in transaction charges. And please excuse my understanding, what I could see is even IEX had filed a request for liberty to charge anything up to 2 paisa on the platform. So how do you see this evolving and going forward if PTC were to give volume-linked discount to its customers?
You said the PTC starts giving volume discount?
PTC's exchange, Hindustan Power Exchange. Yeah.
PTC exchange. Okay. That is a Hindustan Power Exchange. I think we should correct that. That is not PTC exchange. That is an exchange which is promoted by BSC, PTC, and ICICI.
Right.
And PTC is not trading there because PTC cannot trade there as per the regulations. Anyhow, so coming back to your question, if they are a new exchange, they are giving promotional discounts. I don't know how long they will continue. As per the market reports, I understand they intend to give there for first 21 days, and after that for 3 months, maybe some further discount. We don't want to get into this. We'll continue to maintain our transaction fees, what we have been charging. And I think the values which we provide to the participants, we'll continue to work on that. And I'm sure that will help us in retaining our market share.
Got it, sir. Understood. I think that's all from my side. Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Hi, sir. Thank you for taking my question. So firstly, can you talk about the derivative segment? Like, when should we expect that? Would it be once we get substantial volume on the long duration contracts, or we will begin it without that?
Derivative contracts will be launched by the commodity exchanges.
Yeah, but since we have partners, so we would have some expectation as to when it would be launched, right?
I mean, there is a joint working group. The joint working group have to approve that contract because, we have a spot market in electricity, so that contract should not have any adverse impact on the spot market. And particularly during this kind of turbulent condition, I think for the time being, that product has not been approved so far, but then maybe in the next 2-3 months, we may see approval of that. So we may see derivatives in the electricity market. And that should help also some volume in the long duration contracts.
Right.
Because that will provide some visibility to the market participants.
Right. So secondly, on the overall pricing thing, would it be possible for you to share, what kind of transaction fee Hindustan Power Exchange is charging currently?
For what?
What kind of transactions they are charging on electricity?
Mr. Agarwal, can you please repeat your question?
Yeah, my question was, would it be possible for you to share what kind of transaction fee, the lower transaction fee that Hindustan Power Exchange is charging currently?
I understand they have issued a circular, and my colleague, Mr. Rohit Bajaj, will respond to this.
So their transaction fee is same. They have approval to charge 2 paisa on either side. But they have come out with a promotional scheme wherein they are saying for first 21 days, they are giving complete waiver. It is going to end because they started on 6th. Yeah, 21 days it is complete waiver. And then for next 1 or 2 months, they are giving some 10-20% sort of a discount on the transaction fee. This is what we understand.
Okay, so for the first 21 days,
separately for this quarter and the same quarter last year?
Yeah, for discounts, the sell bid is also, from discounts, the sell bids are about 55%. And from generator, it is about, from discounts 56% and from generator about 44%.
This was last year.
Okay. This year, from discounts it is 46% and from generators it is 54%. Because there was a high demand on discounts. So
yeah, obviously the supply situation was tight, so discoms did not have surplus power. Okay. And on the buy side, what is the percentage of open access, sir?
Open access volumes have reduced significantly. Open access volume is just about 4% now. 4% which is the industrial consumers, and then another 6% by the captive industries like Vedanta, ArcelorMittal and Balco, like that. So you can say total about 10%.
Okay, this obviously because the prices have increased. So
Yeah.
okay. Yeah. One final question.
Mr. Baran, I would request you to join. Join the queue again because there are many participants who are waiting for their turn. I'm so sorry.
Yeah, please continue with this.
Ladies and gentlemen, in order to ensure that the management will be able to answer questions from the participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ankur Agarwal from Phillip Capital. Please go ahead.
Yeah, hi, good afternoon, sir. Thank you for the opportunity. Just wanted to check about the sell side liquidity issues that you mentioned during the quarter. If you can share some developments compared to the previous quarters and what was the situation during this quarter and how do we see it evolving? Because as I understand, when coal availability issues were there also earlier, and now probably going forward we could probably see a continued availability issues there. So how do you see the situation over the next couple of quarters panning out?
I mean, situation is continuing. Only thing is the clearing price have reduced slightly. Because of monsoon, the demand has reduced, so clearing price has come down. But on sell side, still the price being quoted by the generators is high because the purchase cost for the coal is quite high. So when they buy coal at a e-auction price, the variable cost is itself about 5 rupees plus for them. And that is why on the sell side we are seeing still challenge.
And so these are mostly the imported coal-based plants, or?
No. These are all domestic coal-based plants. Imported coal-based plants, variable cost is 8 rupees plus side.
Okay. And over the next quarter, we do see some volume impact coming because of this.
See, the production of coal has improved. It has increased. So coal stock position also has improved now. So maybe, most of the states and generating companies are keeping coal to meet the demand of the month of, September, October are 2 critical months. But thereafter, I am 100% sure that the supply situation will improve and you will see good liquidity on exchange platform also.
Okay. And so second question was on the employee expenses. On a sequential basis, we saw a significant decline. Is there any particular reason for that, or is there any dynamic that you would like to share on that? Thank you.
Because if you look at in comparison to the June 30, 2022 financial year 22 versus financial year 23 on year-on-year basis, there are 2 factors which are declining. One is because the last year numbers included the IGX manpower. Because now IGX numbers are not consolidated on the balance sheet basis, being an associate company. So around 1.5 crore impact is that only. And second, because there was some structural change into the CTC structure, so some impact was there during the June quarter last year. And overall this year, because of the few attritions, so the cost was lower. So these are the impact on year-on-year basis. And if you look at the quarter-to-quarter basis, the decline because there was a one-time expenses because of the variable pay adjustment because of the significant higher volume during the last year. So that time one-time cost was booked during the March quarter.
Okay. Oh, thank you, sir.
Thank you. The next question is from the line of Lavanya from UBS. Please go ahead.
Hi, thanks for the opportunity. Sir, I just wanted to know your opinion on implementation of market coupling and MBED. Do you see any potential implementation of market coupling without MBED happening?
I haven't heard this topic in the market from the last 7-8 months. I think this story is over. Nobody is talking about it now.
Okay, both MBED and market coupling, right?
You see, market coupling makes sense only when MBED is implemented.
Right.
And that is how the discussion paper of the Government of India, which was issued to CRC, also mentioned that the first phase of MBED, where the generating stations of the CPSUs were covered, that was without market coupling. And based on the experience of phase 1 implementation, if they want to extend it to the states also, then maybe market coupling can be considered. But even phase 1 itself is difficult to implement. You know, under the kind of situation which took place in the month of March, April, May, world over energy markets are under review. Australia, they suspended the energy market operations for 2 weeks. UK, they are looking at the market design now, re-looking at the market design now. So in India, our situation was much better, mainly because we had almost about 85% of the demand for the PPL. So there was no abnormal increase in the cost. So I think our market model is, from that point of view, working very well. So we have to slowly increase the liquidity in the short-term market, so that market participants also get used to that.
Got it. So one more thing on long duration contracts. So there is a difference in price discovery of long duration contracts. So can you just help me understand how is it different from our traditional previous term ahead price discovery?
In the term ahead, we had matching contracts also and open option also.
Mm-hmm.
Now, in the term ahead market, the matching option has been discontinued by CRC, so it is going to be only open option. And another concept is now reverse auction. Reverse auction, the way the price used to get discovered on the deep platform, the same mechanism is also now being approved for exchange transactions for long duration contracts.
Okay. Thank you. If I may squeeze in last question, what is the open access users contribution, volume contribution previously, and how is it, now it is around 4% is what you highlighted. How was it before when situations were not?
I think it was about 11% last year during the first quarter, 12%.
Oh. Okay. And captive?
Captive is another 4-5%. Captive come to the market because if they are not getting coal, then they come to the market. Last year, the coal supply situation was not bad, so captive contribution was less.
Got it. Thank you so much, sir.
Thank you. The next question is from the line of Sri Karthik V.
Help us understand where does NTPC, the Government of India, and CERC stand with respect to how they're thinking about the implementation. That's all. Thank you.
I told you from last 1 year I have not been hearing anything about ambit. There are many issues involved in implementation of ambit, and first thing is the consent of the states, and what I understand that most of the states are not in favor of ambit. Because at present it is the state who has to arrange supply of power to the consumers of the state. Under the ambit it becomes a central dispatch system. So states will have no control. If they, under this kind of situations, there will be many states who have supplied power, but under ambit, maybe they will not be able to supply that kind of reliable power because their share will be taken by somebody else. As of now, there is no discussion going on ambit, and I don't think it will get implemented.
Thank you.
Yeah, anything else?
Thank you. The next question is from the line of Dhruv Muchal from HDFC Mutual Fund. Please go ahead.
Hi, sir. So on the slide 35, you have mentioned about the late payment surcharge rules where before 10 a.m., by 10 a.m. they have to schedule. So what's holding it back? I mean, the rules are already notified. So what steps are required for this to get implemented now?
The scheduling of power happens as per the CRC regulations only. So rules issued by Government of India have been considered by CRC, and in the draft grid code they have included this provision that distribution companies shall give their withdrawal schedule by 9 o'clock.
Okay, so once the draft code is confirmed, only then these rules will be enforceable.
Yeah, you are right.
Okay, got it. And sir, okay, so any sense, this is in the draft stage right now. So after that is the public hearing, and then the final regulations will come.
Yes.
Is that? Okay.
Yes.
And sir, the second question is on the LDC market design. So you mentioned currently, I believe, for TAM market you are following the open auction mechanism, and you are also planning to implement the reverse auction as per CRC. And sir, currently the DAM market is what design?
For the TAM market, we have already implemented the reverse auction, and we have also carried out a couple of reverse auctions. For the DAM market, it is a double-sided closed auction.
Okay. But sir, isn't the regulator allowing a double-sided closed auction in LDC market?
Double-sided closed auction is effective in a market where there is a very high liquidity. So, in case of our DAM market, we have almost about 700-800 participants participating, where you have more than 200 generator sell side participants and 600 buy side participants. So there is effective price discovery which can take place. If you adopt this kind of a model in a long duration contracts where the participants are 2-3, then price discovery will not happen. So that is why open auction is normally adopted for that kind of a situation.
Perfect.
Open auction or reverse auction.
Got it, sir. Perfect. That's very helpful, sir. Thank you so much.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good afternoon, and thank you very much. Can you share some thoughts on how your gas exchange is performing and how you see the gas trading volumes pick up this year, especially given that gas prices have gone up sharply compared to last year? So how do you see that impacting volumes, and how do you see the prospects for the volumes here over the next 2-3 years?
See, under these difficult conditions, gas exchange, I will say that has done very well. Their volume during the last year has increased every quarter, and they did almost about 1 crore 20 lakh MMBTU, and we did a turnaround in the first year of operation itself. So that was a wonderful thing, I must say. And now also, and you know the gas market conditions. So in spite of very high price of $30-35, in spite of the fact that LNG import is not happening in that big way, still They are doing decent volume, and in the first quarter we have made a profit of 1.15 crore after meeting all the expenses. So, and then July month is also so far they have done good volume. I'm sure there is good opportunity in the gas exchange, and I personally believe that if the gas prices come down to $6-7, which used to remain earlier, and then the opportunity for the gas exchange is as big as what we are doing in the electricity exchange.
That's very interesting. So, if you were to, extend this to the energy saving certificates and India's progress towards, green transition, how do you see your power exchange and the gas exchange together, playing an active role in terms of helping both the generators as well as the users of energy use trading to meet their renewable energy requirements, also develop an offset mechanism where they are falling short in terms of reducing the carbon emission objectives. So is there any thought process on that? Can you give us some thoughts on that?
Can you repeat your question and tell me what exactly you want to know about that?
Yeah, so in terms of your own, perspective on the role Indian Energy Exchange can play both in the power trading as well as gas trading, as we move towards green transition. You're talking about energy saving certificate in one of your slides. So in terms of the longer term role you can play in the country's transition towards green energy, how do you?
Okay.
Yeah,
I'll tell you. Okay. Number one, Government of India has now I think a target of almost about adding 500 gigawatt renewable energy by 2030, and a lot of work is happening in that area. We are also interacting with many IPPs, many developers for setting up renewable generation capacities through the market mechanism, and we are getting a very good response from them. So that is one area. Second area is that even this carbon market is also getting a lot of now traction, and renewable energy certificates and energy saving certificates which are now being traded. Government is thinking of stopping transactions of RECs and ESCerts, and then they will create a carbon market where these certificates will be converted into carbon credits, and there is going to be a mandatory carbon market for that. In fact, Bureau of Energy Efficiency is working on that, and we are closely in discussion with the BEE on these issues. So as and when the opportunity is there to launch the carbon market, we are working on that too, and we will launch that. We will be the first to start that market.
Interesting. Thank you very much, and all the best.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hello.
Hello. Yeah, Mohit.
Yes, sir. One clarification, sir. Do you think in carbon markets, IEX or exchanges will have exclusive role to play, or do you think it will open to the OTC markets also?
Can't say. I mean, it depends on what kind of market design is government adopting. So it all depends on that.
Okay, so when do you think the clarity will emerge on this carbon trading market, sir? Why, in your opinion?
By this financial year end, something should happen because government is working on formulating rule of the game, and BEE also has appointed a consultant now to work out the market design.
Understood, sir. Thank you, sir. Thank you, and all the best, sir. Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Thank you very much to give me the opportunity. Sir, when exchange will have new MD or chairman as both posts held by same person, as new exchanges are coming, so aggressive role of MD now need. That is my question. And I have total regard of MD at present.
I couldn't get your question.
Sir, exchange have CMD, one person only.
Yeah.
So I would like to know when the chairman or MD will be separate as new exchanges are coming and new aggregation is need in the exchange of IEX.
Okay. I mean, your suggestion is that we should separate the chairman and managing director position.
Yes, previously it was separate only.
Yeah,
when the MD resigned, you have taken over as a chairman come MD. That is my point.
Yeah. See, I'm sure you are aware why it happened, because after my first term of the MD, I was continuing as the non-executive chairman of the company. And since the MD left suddenly, so to ensure continuity of the business, I took over as the CMD of the company.
Right.
We are working on the succession planning, and company has a plan for the new MD also.
Okay. Yeah. And this is the new exchange is coming. What strategy we are making to compete with them?
See, as I told you, as an exchange, we have to provide value to our customers. We have to innovate. We have to launch new products. We have to understand the requirement of the customers and design the products to meet their requirements.
Right.
We have to continuously interact with them, understand their problems, suggest them, tell them how exchange can provide benefit to them. And that is something which we are doing. If you look at the developments which have taken place in the last 2 years, the kind of new products which we have launched on the exchange market, and our customer-centric initiatives which we have done in the last 2 years.
Right.
Technology platform, the new developments which we have done on this platform. I'm sure my colleague Mr. Amit is here, and I'll request him to brief about some of the initiatives which we have taken.
Okay.
Yeah, thank you. So we have launched multiple initiatives to improve the experience that customers get from our platform. Some of the key ones have been automated bidding through application programming interface, then web-based platform, financial reconciliation through web-based systems, auto carry forward of bids from one segment to another, so that it eliminates reduces the manual effort to transfer bids from one segment to another. So these are some of the important customer-centric initiatives that we have implemented, and many more we are working upon to ensure that customers' experience with our platform continuously improves and they get best-in-class experience with our platform.
Okay. Thank you.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Hi, sir. Thank you for the opportunity again. So, can you talk a little bit about in terms of the pricing that we're looking for the gross bidding contracts? We've always maintained that there would be some discounts we would be offering. So, can you talk a little bit about that? And also, with this discounted pricing that we will do in the gross bidding, do you think that will open up situations wherein the end clients of IEX would be looking for the same kind of pricing in the other segments as well?
Yeah. So yes, we are. In fact, we have mentioned in the past that when the gross bidding thing will be introduced, we might have a different pricing for that. We have not yet decided because it is still little away from implementation. Approval is awaited from regulator. Once we have that approval, we will do. Just to answer your second question, where you have raised concern, if we are going to give discounting price in gross bidding, then in the real electricity segment also there could be pressure on the pricing. I don't think that will happen, because when we are asking anybody, in fact, when we are convincing any distribution company to go for gross bidding, we are asking him to buy as well as sell on our platform. Today, what they are doing is they are placing their bid on net basis. So how much deficit they have or how much surplus they have, they place bid only for that. When we are requesting them for gross bidding, then they are placing their sell also and corresponding buy also they are placing at our platform. So we cannot treat both the things at the same level. We have to differentiate, and we don't think that it can cause any impact on our pricing, on the regular pricing. on the different electricity segments where we are trading now.
Yeah. So the thought process that I had over here was that this is on the gross bidding, it is basically, volume based discount. Yes, someone was bringing much more volumes in liquidity, so we'll be providing discount. So the thought over here is, in the regular market, if there's some clients, say something like NTPC or all that, who might have a very large volumes, something like PTC, who brings very decent volumes to our exchange. So in that case, maybe they might also be of the thought, since we are also bringing a lot of volume, should we also qualify for, some kind of discount?
We are not talking about anything volume-based discount. To give you one example, today if a state has 25,000 megawatt PPS and the demand is 20,000 megawatt, and out of the 25,000 megawatt, maybe the 22,000 megawatt capacity is available. What we are saying is, if your base load demand is 18,000 megawatt, for the rest of the 4,000 megawatt sell you put on the exchange platform and 2,000 megawatt buy also you put on the exchange platform. Exchange will do the optimization for you. And out of that, in a particular time block, suppose he has sold 3,000 megawatt and bought 2,000 megawatt. That means on net basis, he has sold 1,000 megawatt. So for this 2,000 megawatt which has been sold by him and bought by him, the price will be different. But for this 1,000 megawatt which has been sold by him, the price will be normal price which we are charging. So it will be basically based on this concept. I don't think this has any linkage with the volume-based discount.
That clarifies it. Thank you.
Thank you. The next question is from the line of Ankur Agrawal from Phillip Capital. Please go ahead.
Yeah, hello, sir. Thank you for the opportunity once again. I just wanted to come back to the sell-side liquidity issue. I mean, right now we are seeing some structural increase in the electricity demand in India in terms of the peak demand that we have seen jumping over 210 gigawatt. So do you see any, there's no new thermal capacity going to come online, limited thermal capacity going to come online over the next, let's say 5-10 years, and we are focusing more on renewable. So are you seeing any structural issues with the sell-side liquidity that will be, that we foresee going into the future? And how do you see that panning out, with limited thermal capacity getting installed? So,
yeah, this year there were few challenges, partly because of non-availability of coal and very high price of imported coal. But it was felt that whatever coal-based capacity we have, maybe that may not be enough to meet the peak load demand going forward. So what I understand that some of the new projects are being taken up now. Very recently, I read in the newspaper NTPC has awarded 1320 megawatt new plants, and they are working on a couple of more plants.
I'll just add here. See, the PLF that we have recorded in first quarter is about 59%, and this is 10 years high PLF. We have never seen this kind of PLF in the past. Yes, and this was last year. This number was only 54%. So still a lot of capacity which is available, which will be utilized going forward as the demand will increase. And if you refer to any of the system operator report, NLDC report, you will find that any given day, more than 50,000 megawatt capacity is non-operational. It is not available because of various reasons. So we feel that there is some capacity still available. There is a lot more capacity which is going to come. More than 30,000 megawatt capacity will get commissioned. More than 10,000 megawatt is merchant capacity which is available in the country where the utilization level is very, very low. These plants are not operating because the prices most of the time are not conducive. So what we feel that as price pressure will be there, prices will start to rise. More and more of this capacity utilization will start and it will increase. Yes, going forward 3-4 years down the line, 2-3 years down the line, we might see some shortfall depending on how our demand will increase. But in the near to medium term, we really do not see any major shortfall in the demand. We have sufficient capacity available as of now.
Okay.
The present crisis that we have seen, it is mostly because of coal. So the coal prices were high, imported coal prices were high. Many of them were not able to buy at that price. And second thing was certainty is also not there. Because when you import coal, it takes about 1 month by the time you start getting coal, and you are not very sure whether after 1 month also the same price would continue. So I think these are some of the factors which has caused this disruption, and the government measures where the coal production has increased now. The supply to the IPPs have also increased now. We are hopeful that in times to come, the situation would be much better and supply side constraints will be eased out.
Yes, sir. You're absolutely right about the supply side constraints. But the demand side also, we have seen a structural shift. Because we earlier used to be having a peak demand of somewhere around 180, 185 gigawatts, and now that has jumped to over 200 gigawatts. Of course, the summer heat wave had something to do with that, but we are also seeing some increase in the demand, so peak demand. So I think the system slack that might be available could be going down. Is that a fair way to look at it also?
So when the demand was 211 gigawatt, even at that time also, we had some capacity which was not operating.
Right.
So I don't, as of now, for the next couple of years, I don't see any challenge in that. And as Mr. Rohit mentioned, that there is already some capacity which is under construction, which will get commissioned, and maybe some new capacity will be taken up. So government and CA, they are all working on all these things.
Right. Oh, thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sumit Kishore from Axis Capital Limited for closing comments.
Thanks a lot to Goel sir and the whole management team at IEX for patiently answering all questions. Sir, if you have any closing remarks at this point.
I would like to thank each one of you for being part of today's call. During the quarter, we have seen a lot of initiatives announced by the government and regulator towards creating a favorable policy and regulatory environment and to transform the energy market. We remain committed in doing our bit for building a sustainable and efficient energy future in India. Thank you, friends, and I look forward to our next interaction with you. Till then, wish you all good health and thank you.
On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.